they will say that we gave this drug to 14 patients and 10 didn't die, and the stock will go up 800%.
Have you tried this strategy with options at all, either in the money options or using a much smaller capital size, maybe 1% of capital?
So if you're in 5 today and you want to hold it for a week, you're missing plenty of trades throughout the week.
Hi, everyone, and welcome back to another episode of Trading Takes. I'm here with Judah today. Judah, how are you?
Good. How are you, Chris?
Good, good. We have a very special episode today, and we have a trading legend joining us. You might know him as Stockbee. We have Mr. Pradeep Bonde. Pradeep, thank you
Hey,
for
hi.
joining us today.
Thank you.
How are you doing?
Yeah, good, good.
Good.
Good to
Well,
have you
I know
on.
that we've been wanting to have you on for a while, and you
Mhm.
are a legendary swing trader. And Judah has drawn a lot of his style from a lot of your teachings. So we were just
Mhm.
very excited to talk with you today. And I know that
Mhm.
you've mentored some of the biggest traders out there, like Christian Kulmagi and people
Mhm.
like that. So we're just very happy to talk with you today. So for people who might not be super familiar with you off the bat, what is a little bit of your background? How did you get into trading, and how did you become who you are?
Uh, so I basically came to US in 1998, and that time was a dot-com boom, which was happening. And at that time, I was working for a dot-com. The person who has financed the dot-com, he was heavily involved in the stock market. So that was one of the things like, and I got a little bit exposure to. And by around 2000, we ran out of money, whatever money we had raised. And when the money got over, when I came back to New Jersey, like my ex-wife, she had bought some stocks, and she said, "Can you look at it?" Because every day she had bought like Juniper, Yahoo, Qualcomm, and every day those stocks were going down. So I started looking at this, and then I got interested, and then I started researching stocks. And first 2 years I struggled a bit, but like then I hit a jackpot in one trade, and then I never looked back after that, basically. So I've been trading since 2000, actually from 1999 around, but like 2000 is really seriously, and never done anything else but like trading basically since then.
And so, how do you approach the markets that is so different from a lot of other people? I know much of your style is, kind of momentum bursts or, the episodic pivots you've talked about, but it's basically when a stock has a baseline and then something changes or it starts acting differently, you are taking advantage of that new momentum. So, how do you
Mhm.
approach the markets?
Basically, there are two things which I trade if you break it down to very granular level. And one of the things which I trade is news. So EP is episodic pivot, or EP as it is called, is based on news, and I have a variation of that setup nowadays which I trade. But essentially, it is a news based, catalyst based trade. So if there is a catalyst for a stock which did not have a catalyst, and suddenly there's a catalyst, like to give you an example, RGS, which is like a stock which just 3 days ago had a catalyst, right? And and as a result of this catalyst, the stock went up like 304% or more than that in a day, basically, right? So whenever there is a news, and if the news is not priced into the stock is going to react. And sometimes the reaction to the news is just one day, and sometimes the news reaction is for a longer period. And if you can identify that, then you buy it based on the news catalyst and make money. That's the one way, which is a catalyst based kind of a strategy, which is EP. And the second kind of a strategy is essentially in any market, any stock, if sudden buying comes in or sudden selling comes in, then the stock moves in the direction of that sudden buying or sudden selling. uh, that is what is momentum burst, and this is just a short term phenomena where the stock will move 3 to 5 days, and in 3 to 5 days it will make 8 to 20% move. So you're just trying to capture a lot of these momentum burst. And the good thing about momentum burst is that because there are so many stocks, and in a year so many of them so many times make that move, that you can make a living doing that particular thing, basically. So those are the two basic approaches. But in addition to what I've done, in terms of the episodic pivot, I have developed a new variation of episodic pivot now, which is based on higher volume, kind of a major catalyst as volume, and that has expanded the universe of EPs which I can trade today, and that's become a mainstay of what I try to do in the EP side nowadays.
Yeah, so it'd be interesting to go into in a little bit of in depth about both strategies. You know,
Mm-hmm.
EPs. I know a lot of people have a misconception about the EPs, and every morning there's maybe five ten different stocks that gap up on news, and they all have great volume relative to what
Mm-hmm.
it's been doing. So
Mm-hmm.
how do you really calculate the game changing catalyst, and within that, how do you determine which to take and which to ignore?
Mm-hmm. So yes, you're right. Like an EP today for people, any gap up is EP. Any gap up is not EP. EP is essentially the story. The arc of the story should change. Like if you watch movies or if you see good television, right? And what they do is they make you believe that this is what is going to happen, and suddenly arc of the story changes. A character dies, or a character is gets onto a plane, meets a beautiful woman, and things change. Or like some businessman hires a hooker just for one night stand and he falls in love and the story takes a different turn, right? Pretty human. So same way, if a stock has some sort of a catalyst, and that catalyst is not a 1 day or 2 day catalyst, but it is something which is going to change the trajectory of that stock, then that's EP, right? And basically because that episode is going to change the entire story. After that, the movie is never the same again, right? So that is what you're looking for. Now, classically, what is it that really makes a stock change its arc of story is essentially most of the time is some sort of a earnings or sales growth, and this works best on stocks which are not on everyone's radar. So when a stock which is neglected by the market, or there is no reason for the market to pay attention to that stock, suddenly comes out and says, look, hey, our sales growth is 100%, 300%, or 800%, the market is going to react because that catalyst is not priced into the market, right? So the market is going to react, and as a result, the stock is going to double or triple. I remember the first trade I did like this was basically on a stock called USLB, which was at that time, they make these meters which can be read remotely. You would see most of the meters nowadays in US, they're read remotely using radio frequency. So this was the company which had discovered this particular kind of a meter, and they came out, and this was a this stock was in the market. It had IPO'd for 2 3 4 years. Nobody was paying attention. It was trading many days before it had this earnings day, where they came out with this phenomenal 2600% sales growth and 900% earnings growth. There were days when it was trading zero shares, right? So when the market discovered it, there was a scramble for everybody, the funds, everybody wants to get into this stock, and in just like in a 2 weeks or 3 weeks, the stock went up 300%. Now this happens all the time where the market is caught by surprise, and that's exactly what you're trading. You're trading a market surprise. Now some surprises are short term and some surprises are long term. Now the long term surprises are essentially some sort of a earning story, which is changes the market's perception about that stock, or some sort of a new technology. Like Nvidia is a classic example. Once the chat GPT came in, uh, since then it has been growing, right? Or SMCI, which had a recently good this thing, they came and surprised the market. They came and said, like, we are guiding higher because our sales are going crazy because of this, people buying servers because of AI, right? Now that's one kind of a story where you have a genuine catalyst. Now there is this second kind of stocks, which are biotechnology stocks. And biotechnology stocks, as most of you know if you have been in market, they move based on some phase 1, phase 2, phase 3 studies, and most of the time they are like really uh, like they will say that we gave this drug to 14 patients and 10 didn't die, and the stock will go up 800%, right? Means it has like that. So you have to know a little bit about the sector to make a call on biotechnology. You need to understand a little bit of what kind of stocks make big moves, like cancer related nowadays, like weight loss related, but like rare disease related. So those are the things which are the second category of stocks which make a move. The third kind of a category of stocks is where there is a management change, or there is some sort of a CFO leaves the company. That's the first rat to desert a ship is a CFO, right? If a company is going to go like there is some, so or CEO, new CEO comes in, or something happens, or there can be uh, some sort of a catastrophic catalyst, right? And that day, like couple of months ago, I was watching the news and saw this news saying, look, a plane, Boeing plane door fell out, right? Now you just like it doesn't make sense of a plane I know Boeing is going to go down 20-30%. On the short side you don't make the kind of money which you make on the long side on a EP, right? But I miss, there is no way this thing is not going to go down, right? And so that's like in a very catastrophic. Or I remember 4 or 5 months ago, Mobile Eye, which makes the chips for the EVs and cars and all, they came out and they guided their earnings significantly down. There was no way. When I looked at it, obviously the market reaction, and you have to know how market reacts. On the short side, many times when there's a negative catalyst, short term, it just like gaps down and it recovers for a day or two. But when I looked at that catalyst, I said, no way, they're guiding down significantly. It's going to go down. So that's another catalyst which is there. New product launches, that's another catalyst. Now these are like what I call as real catalyst, or these are like these are catalysts which you and me can look at the information and say, "Okay, okay, based on this, the stock is likely to go up or go down," right? But there is another kind of a catalyst which is like there is just a story, right? There are tall stories space. If you remember SPAC, the ticker for that particular thing, that one day Donald Trump was the president and he declared that US is going to launch Space Force, right? And how the market operates is like, then which company is related to space? So they are looking for around for sticker, and space has a sticker which is SPC, space, right? And so uh, that stock goes up 300%, 400%, 60 or 70 million shares traded that day. Earlier, I used to ignore these stocks which used to have this flimsy catalyst or some story catalyst, where like we got this vertically a plane which will go up vertically, and we tested it in some UK or somewhere, and it went up 50 feet above the ground, and the stock will go up 300%, 400%. Nowadays I like those kind of stocks because I've studied those stocks, and I have a second category of EPs which I trade, which is story EPs, which are just like an fugazi. It's just like hot air, like we are going to colonize Mars, and the stock goes up for 600, 700% based on that, right? So those are the catalyst. So I have a classified like in the catalyst for a lot of things nowadays, because I have a lot more experience than when I used to trade EP just in the beginning as earnings play. So in order to find these systematically, I have some methodology in the morning. All the method or the all these effort is done either in post market or in pre market. So I have developed a checklist to check whether a stock is in the first category, which is like a stock has a real catalyst. I call them cats, which are like real catalyst. And the rest of the stocks, I call them dogs. And unfortunately, or like for whatever reason, the dogs make bigger moves than the cat. So I trade these dogs a lot nowadays, and in fact, the dogs make bigger moves than the stocks with real catalyst. So as a result of this, what I have done is basically I can classify them into two categories. And if it is a dog kind of a thing, I'm not going to risk as big as what I will risk on a real catalyst, because there I have a conviction and I know how it is likely to evolve and all. I keep like basically uh, looking at these two categories or buckets, and I treat those buckets differently. In the second bucket, I definitely want to look at whether there's a big volume comes in or not, right? Because the stories only fly if there is a big volume which comes in. If there is a genuine catalyst, I don't care about volume, because I know the catalyst I buy, many times I'm the first one to buy, because I know it's going to go up based on the real catalyst. But if there is a story, then I want to see some volume, and I've studied this. Obviously, I buy them in the morning based on just the news also. But if they do 10 million plus volume, uh, then I consider that as something which is likely to have some legs, and I'll give them more room to run for that particular stock. So that is how I have created a new kind of a EP, which is called a 9 million plus volume EP. And that has become a mainstay of what I try and do nowadays, because the classical EPs where you have a stock like SMCI or Root comes out with earnings and makes a 100 200% move in a year happens only 5 or 6 times, while the stocks which will have this sudden surge of volume of like 9 million, it happens 400 500 times in a year. So it gives you a lot more opportunity to find these trades. And my research shows that these stocks which have these very high volume breakouts, they tend to make 50 to 100 200% moves after making that kind of a volume moves.
And
So that's what I go into.
so the 9 million volume, when does that come in by? Because a lot of the times when there's 9 million volume, the stock's a lot higher than you want to get into.
Mm,
And then another question, which is in the same category, is stocks that gap up too much. What is considered too much, and what do you do about it if you want to get into it later on? Like Rivian, for example,
mhm,
it went from 12 to 18 last night in
mhm,
you know
mhm,
in aftermarket, and then it gapped up, and like sometimes this happened, not to follow through, but a lot of stocks follow through. They just gap way too much, and
mhm,
you can't get into it because the gap is too
mhm,
much at the
mhm,
moment. So
mhm.
what would you suggest over there?
So like typically this is a phenomena which is happening in the market. Like, and if you are trading if you are trading the market, both of you people look too young for that, but if you are trading the market 25 or 30 years ago, right? If there was a good catalyst which came in, the stock was not gapping up as much as it is gapping up currently, right? And it used to gap up 8%,
Hmm.
6%, 5%. Many of the EPs I got into, they're gapping up 4, 5, 6%. So there is a long pathway, or there is a long runway for them to run. Nowadays, what happens is stock gaps of 30 40% on the catalyst, because every single kid is trading news currently, right? And basically that's the most popular style of trading, for day trading or for algorithmic trading or everything, right? So I look at like the catalyst. Once I look at the catalyst and I see what is the total move this catalyst is likely to make based on this particular thing, and if I see that the stock is gapping up even beyond that range. Like, and when I saw Rivian, means Rivian is not something new. I've seen and traded Rivian multiple times because it keeps showing up in 9 million EP all the time, right? And basically, I know the catalyst is not worth 50% move, right? I know because Rivian has 624 million or something. Float is what Rivian's float is like 600 million plus,
Yeah,
614 million, right? Its capitalization is 11 billion. That's another very important thing to remember, which is like all my studies on EPs show that the best EPs have a capitalization below 10 billion, right? And
it's a 10x10.
10 billion, below 10 billion. And the best ones have capitalization below even 1 billion, right? If you see like just in last 1 week, if you see this Regis RGS which made a move, its capitalization was what, like, and its capitalization after it made that bigger move of 400% is 45 million, and before it made that move, its capitalization was 11 million, right? A 11 million capitalization stock can double, triple, go up 1000%, right? But if you have a stock which already has 34 billion or 40 billion capitalization, or even there are not many stocks in the market which have a capitalization above 40 million, 40 billion, right? If you look at the total market. So if you have 10 billion capitalization, 11 billion cash stock, is going to double, triple, means anything can happen in the market. Probability of that happening is very low, right? Based on a catalyst which I don't even think was like really game changing. So capitalization is very important. You see this stock which has made this big move, MLGO or something like that, right? MLGO. Now, if you look at that stock is up like what, like 1000% in last this thing. And if I look at the capitalization explains a lot of it, because prior to this move of 1000%, its capitalization was 6 million. Can a 6 million capitalization stock go up and make 10,000% move? Yes. But a 60 billion capitalization stock. So you have to look at the gap in context of what is the capitalization of the stock, right? So for me, when I looked at Rivian, I said like, this particular stock capitalization is already about 10 billion, right? And 50% is this catalyst really? So that's why I didn't get into that particular stock. So I always look at like, what is the capitalization, what is the float? Smaller the float, more likely. But typically, I would not take a gap up of 40-50% unless the catalyst itself is really game changing, or I really think that I must get into it, kind of a thing. And 20% gap ups, 10% gap means anything up to 20-30%. 30% nowadays is a norm. 20% I would still take it, basically.
It's a fascinating style because it really blends, what you would usually categorize as very traditional, like momentum trading, but the way that you are analyzing catalysts, and you're basically doing net present value calculations like a fundamental investor actually would. And so understanding both of those things, you can really understand the catalyst, understand the market cap and the price, and then basically do your own version of you're discounting it to like the net present value to see, is it way off? And those are how you can get those terrific moves like an SMCI or an NVIDIA early on, when if you can see that their earnings might go up 5 or 6 times, and then the stock might follow that over the course of a year or 2 years. And those would be the more like classic episodic pivots where it's like sometimes a long-term story, a huge fundamental change, stable earnings, you have institutions getting in there and a huge revaluation, as opposed to something like Rivian where it's it's they have a short-term catalyst. Yes, it's a couple $1 billion, huge gap up, but then you have the next couple years where the earnings don't really change that much. And so, yeah, it's a very interesting comparison and how you categorize that. And I think that that's a testament to your experience in the market. And I know that something that you talk about frequently is like the procedural memory. And so basically like the muscle memory of identifying these setups and then playing them immediately. So for people who are not super familiar with this style, could you talk about the importance of that procedural memory and how do you build it?
Yeah. Classic example of procedural memory at work is today morning. I came into my office. As soon as I came into the office, I was looking at the news and I saw one stock, Aristanet. It said Citibank raised its price target, right? And that instant, I said like, I'm going to buy Aristanet today, right, at the open. And I bought Aristanet, and it went up like some $12, right? And basically, now this is very difficult to explain to somebody who doesn't have enough experience in the market, right? Because what works there is procedural memory. I was not thinking, I didn't do analysis. It was just instant snap reaction saying, okay, yesterday Aristanet was up or down less than 0.1% or something. So this news itself is enough for it to go up 10-12%, right? So procedural memory is something which we use in everyday life, right? When we are driving, we are not even cognizant of what is happening around us, right? And I see a lot of time when I've stopped at a signal, somebody is like eating a bagel, putting on a lipstick, or curling their eyelashes, and they can still drive, right? Why? Because it's a muscle memory, right? Once you learn driving, that's why if you have a teenager, my daughter is no more a teenager, but when she was learning driving, and you're sitting there and you feel so uncomfortable because they're not operating from procedural memory, right? They're trying to figure out like whether to take a right turn and whether to put an indicator. But to you, it's like
Natural.
completely part of you now, right? So this is what short-term trading is all about, and this is why it's very difficult for new people to learn in the beginning short term, because short-term traders operate from procedural memory, and which is not a conscious memory. And that's why you can sit next to a trader who is very successful and you can watch him drive, right? But you cannot, and this is what you'll see in many proprietary firms. There are traders who make 5 million and there are traders sitting next to them and they struggle to even make $50 in a day. Why? It's procedural memory. And procedural memory is trained through repetition. Procedural memory is like swimming is a classic procedural memory, right? As a swimmer, you jump into the water, automatically you know what to do. You're not thinking, what am I going to do, which hand, which how am I going to breathe, right? But that comes in through a practice, basically. Similarly, like if when a kid is born, he doesn't have any procedural memories, but he develops thousands of procedural memory in the first year itself, because without that, they will not be able to survive. So, to develop procedural memory, you need to break down a sequence into a process and practice that procedural memory. You will need to have a set process. You need to do the set process again and again. There has to be a feedback loop. When you learn driving, there is some feedback loop. The driver instructor tells you what you're doing wrong. As a result, you correct next time and you correct next time. Now in trading, when you're doing it on your own, you're your own driver, your own driving instructor, and that's what makes it very difficult for people to correct their performance. But the good thing about procedural memory is once you develop it, it is permanent,
Hmm.
right? So, how can you develop it? You develop it by basically narrowing down your focus. I think, and some of the classical problem I see with new traders is they're trading too much, too many things, and they're trading too many styles. So you can't have develop procedural memory for 5 styles. It's very difficult, right? And basically, so if you break it down, trade a simple setup, develop a procedural memory, things become easier.
I'm curious about, the exiting and selling in a position. A lot of times when you have a good breakout, it could move 20, 25, even more in one day.
Hmm.
And I know that this style, especially EPs, it's not like a momentum burst where you're looking for a 3 to 5 day move. This could be
Hmm.
longer term.
Hmm.
So what's the process there? And, something moves 20% in one day after you already bought it. How
Hmm.
do you start to exit there? Do you take partial off that day and then you hold the rest? What's that trading strategy there?
So whenever I'm doing EP, okay, before I put in the trade, I have my calculated in my mind what is likely percentage the stock is going to make a move, right? So I always like in a workout in my mind, you look and this is a catalyst, SMCI stock is likely to make 50 to 60% move based on this particular catalyst, right? Or like can I say, you have like some sort of like classic example just yesterday, ENVX yesterday or day before yesterday, ENVX
Hmm.
had some catalyst, right? And this is a stock which I traded multiple times, right? And then I
Yeah.
know I looked at the catalyst and I said, like, this catalyst is going to make this stock go up around 20-25% kind of a thing, right? But obviously, market can surprise you sometimes. So at around like 25% gap, after it, did that kind of a thing, I started selling 80% and I kept 20. And I
Hmm.
knew that by the end of the day, because this is a catalyst, this is a stock which I call as a story stock. It doesn't have earnings, it doesn't have sales, it has this story that solid state high density battery which is going to come out sometime in our lifetime, right? And basically, uh, so that I'm very clear that why I was exiting that particular trade. But as against that, some weeks ago I bought CRDO, which is Credo Technologies. And the earnings was phenomenal. I looked at the earnings, I looked at the sales, and luckily for me, it wasn't gapping up much. It was gapping up only 4% or 5% in the morning. So I said, based on this earnings and sales, this stock is likely to make around 40% move. So I didn't sell on the first day. The stock made a big move. On the first day, the stock went up 27%, but I was expecting it to make around 40-50% move. So I held it. I only sold it once, it had reached around my threshold of around 40%. And then I moved my stop to say, okay, this is I'm very happy because it did that in 7 days, right? It did 40% in 7 days. That's you hit a jackpot, right? So
Hmm.
I said, I'm going to lock in, and I put in my stop to lock in at least 40%. And the same day the stock started going down, or it faded, and I got stopped out, right? So for EP, that is my approach to deciding when to exit. Now sometimes when you get into an EP, and especially in some of these biotechnology and story stocks, um, it just goes so crazy that it just makes no sense to keep on holding that stock. Like that day, like it wasn't really EP. I don't even know if there was EP. I was just in the morning, I saw this MLGO showing up in one of my scans first thing in the morning, 9 million, right? I entered it, I didn't think it will make 288% move, right?
Hmm.
So I got out like when it doubled, but like after that it went on to make so there is and you holding it after that didn't really make much of a sense, because I don't think it made much of the thing beyond 1 day move. It did make 80% move after that. So for story stocks, uh, it's different. But for like an EPs, I'm always calculating in my mind, based on experience, based on the sales number, based on capitalization, as to how much the stock is going to move. And I'm willing to give it more room to run. And sometimes that comes to bite me, because I have good profit in 1 or 2 days, and then I don't take it. Like Gap is a good example. I got in and I thought like this is a real genuine turnaround, and I got in very nice entry. It went up around 13-14%. I didn't take the profit. I said like, and let it run, and it stopped me out for a break even.
Hmm.
Yeah. So, what does your risk management look like? So, you described, when you're looking at an episodic pivot or something where it's more fundamentally driven, you're willing to give it a wider range because you expect more consistent, bigger upside, and you're willing to
Hmm.
take that a little bit of extra risk. With
Hmm.
story stocks or with social momentum or something, it's kind of easy come, easy go, where everything will be going great and then it can all stop at once.
Hmm.
So, what are the technical signals that you look for? Are you usually using low of day? Are you using a trailing stop? Are you using a certain pattern?
So basically, when I enter, basically I try and enter. Like if I identify these stocks, I try and enter first thing in the morning. So I don't do pre-market, but like I enter at the opening print or something like that. That time, most of the time, based on the catalyst, I know that look, and I'll give it 3 to 4%, 2.5 to 3% room below my entry. Because if it is genuine catalyst, it should be like a bullet which just goes up. It should not come back, right? And basically, and if I get stopped out, and if I'm convinced about the catalyst, then I'll re-enter. But most of the time, a stock which has genuine catalyst, it just goes, right? And basically, now for story stocks, that's where uh, there are a couple of risk management. I'm not convinced in my own mind, because I do all these analysis, that even though story stocks can make me more money than the real catalyst stock, to put in more than 10% or 20% of my account in it. So the risk management also becomes the size which I am willing to take in one of these story stocks kind of a thing. So the size itself is much lower. While in a good catalyst kind of a stock where there is a genuine catalyst, um, on a EP, I'm willing to go really big. I'm willing to put big money, because that's how you grow your money, right? And basically, so but on a story stocks, I always like, and I try and play smaller size, give it a little bit more room, because I've been surprised every single time I exit a story stock, it tends to go up 30-40% more, or even more than I expected, right? Means how many people who trade would have expected something like MLGO to make the kind of move it made, right? Anyway,
Hmm.
so you always get surprised. So I try and keep a smaller portion. I get 80% out at profits which are good, 50-60%, and then I keep a 20% position in case it does some crazy things, basically.
So now,
Yeah.
But
can you?
generally for a exit, right? And after trading many years, and after looking at what happens to stocks, I always exit in tranches. So I peel my positions. So I'll exit 20%, then I'll see, then I'll exit another 20%, then I exit, and the last 20% I try and give it as much room to run as possible.
So how much positions do you usually have at once at that point? Because if you don't get stopped out of one with 20%, you're adding on another and another and another, and it could pile on. So do you end up with 10 plus positions at
I
a
don't
time?
end up ever with a 10% position, 3 to 5 positions. The stub position, which is just 20% left, I don't even consider it a position then. Like, but
Right.
and when I do momentum burst, also I tend to operate in higher priced. I focus only on higher priced stocks, so my position sizes are much larger on those stocks, because the stops are very small, right?
Hmm.
So I typically go in with like 40-50% of the account kind of a see. If my stop is going to be just 1%, then I go with a larger size, basically, right?
So can we get into momentum burst and
Mm-hmm.
what it is exactly?
Mm-hmm. Yeah, so momentum burst is just a sudden burst of momentum, as the word itself says, right? And it can start from any level. Like if you look at, like, say, recent trade which I did in O'Reilly, right? And it suddenly the momentum came in there, and the stock had a breakout, which was like, and it was up around $11, and then in next 4 days it went around $83 or $90, right? And uh, this is just a phenomena in the market where if some stock suddenly has a breakout, right? All the traders, they just go onto that particular stock. Today, Aristonet broke out first thing in the morning. It was very apparent, right? And the rest of the day, people kept buying that particular stock. Now, what happens is, because the market has these, like, you guys are from Investor Underground, you're first one to enter most of the news plays. You enter in even pre-market, I see, like, on Twitter and all, right? But there is a second layer of people who enter near the open, then there is a third layer who are followers who enter later, and then there is this super uh, intelligent people who enter on second day, and there are super intelligent who enter on third day also, right? So as a result, the stock goes up 2 or 3 days, and after that there is nobody left to buy, and the stock typically collapses, or like it goes into orderly sideways move, or it pulls back. So I'm trying to capitalize on this 3 to 5 day moves, and it's highly profitable because in 3 to 5 days the stock makes 8 to 10% moves. Or if it is a high price stock, you risk $5 and you make like 70, 80, 100, $200 in just 3 to 5 days, right? So I try and do, and that is the foundation why I can take bigger risk on an EP, is because I have this steady stream of trades which I'm doing, where I'm hitting singles, right? And then once in a while you get like a home run kind of a trade, you can take a 10% risk, because you know that even if that trade doesn't work out, it's not going to be a problem, because I can recover through singles, and the singles allow me to finance my once in a while big EP trade, where I'm willing to put 100% of my account, or like go with a 10% stop, because I'm so convinced the story is life changing, right? So that's what momentum burst is. On momentum burst, I try and enter as early as possible, as soon as the momentum is v- visible or it's like valid, and I hold those trades for 3 to 4 or 5 days, and after third day I see what has happened. If the trade is still working in my favor, I'll hold it. Otherwise, on third day, it is not working, you can kill the trade, go into the next trade.
Do you
It's
pyramid out, or is it just one sale at 3 to 5 days?
I also pyramid out of it, like, and no, I don't pyramid, like, and I enter everything in one go, but I
Mhm.
exit
Yeah, like.
in terms of peeling it, right, basically.
Mhm.
That's just fascinating because I know that other very successful traders like Lance Brightstein, he talks about like the easy money trades and basically having those singles add up as kind of your padding. So when a huge opportunity comes along, you can take that extra risk because you know that you can make that up with the easy
Mm-hmm.
money trade. So it's just great to
Mm-hmm.
see different styles, but the same commonalities between
Mm-hmm.
excellent traders. And
Mm-hmm.
so I wanted to ask, what type of market does this work best in? I mean, right now it seems like the ideal market because it's a bullish market, it's a reflation kind of market. You have things that trend, but if a bear market comes along, do you change your strategy or are you just much less active?
So the momentum burst works both on the long side as well as it works on the short side. Like, in fact, and I did a trade yesterday, which I made more money than I made on the bullish side in the last 3 4 days, which is Moderna. I saw Moderna breaking down in the first few minutes, and I entered at 9:31. Actually, I shorted it, right, and it went down $15 or something. My play, basically, my entry, right? So I trade both sides of the equation, but obviously, for variety of reason, taxation and all, I have more capital on the long side, because a lot of capital is in accounts like 401ks and trust and all. So obviously, when the market is going down, then I do less amount of trading, not because of like just because a lot of capital I cannot trade on the short side. So that's why I don't really focus much on short side, even though I know the small caps are excellent for shorting. All small caps, most of the small caps, they're just like at some stage they all collapse, right? So you can make money on the short side, but not been a focus, because 80% of money is like really on the long side, where I can't really do shorting. What kind of stock momentum burst works best on? Momentum works again. Momentum burst works best on stocks with capitalization below 1 billion. Okay, 1 billion and three sectors uh, produces the best momentum burst: biotechnology, technology, and consumer discretionary. If you have to trade momentum burst, if you just stick to biotechnology and technology, you will get high win rate, because that's the kind of thing where, like, suddenly if buying comes in, more people chase that moves, more people are attracted to that particular thing. Lower price stocks do best. Higher price stocks don't make such a big move, but higher price stocks, you treat them differently, because you are not looking at percentage gains, but you're looking at, if I risk $1, we can make $10 or $5 or $8. It's the same trade, right? So that's the thing. And essentially, stocks with which have IPO'd in the last 10 years, they tend to do well than stocks which are more established, when you're looking at either EP or as well as momentum burst. Mostly, and especially the one which are like, and basically in the last 3 years, can have good moves on EP also and on momentum burst also. But I'll take
And
any move, but like typically the smaller the capitalization, is a one thing. Capitalization is very important, which is like the most important thing. If you have a choice between taking three or four different breakouts, choose the one which has the smallest capitalization, smallest float, and lowest price.
momentum burst is more technical, right? Like
Yeah.
usually the catalyst comes out a week ago and then it sets up or tightens up. Like how do you look at
Mhm.
the momentum burst itself?
I don't really care about catalyst. I don't care about anything else. It's just a pattern based trade, right? It's just a pattern. All that I want is the stock should not be up 2 days in a row before the momentum burst happened. The context is important, where the momentum burst is starting from, right? And if the stock is already very extended, the stock has made 3 4 moves, I'm not going to be going into a momentum burst on a fourth breakout or a third breakout. But if the stock has consolidation, or it has an orderly pullback, and this is the first day of a breakout, then it is likely to work for 3 to 5 days. Uh, the trick is to avoid extended stocks. The trick is to not like get into a third leg of a move or a fourth leg of a move. First, second leg, ideal best.
It's very logical too, because if you look at a stock that's already up 2, 3, 4 days in a row, that momentum burst is actually the parabolic, or that's the grand
Hmm.
finale of the move,
Hmm.
as opposed to a momentum burst at the beginning of the move. That's the catalyst, and basically the market recognizing that something's different about it. So that's
Hmm.
just a very logical thing to
Hmm.
do. It makes a lot of sense. Have you tried this strategy with options at all, either in the money options or using a much smaller capital size, maybe 1% of capital, and using something like that with some of the more established stocks like Nvidia or something?
Unfortunately, like, and I tried options many years ago when I was starting, and I didn't find luck with options at that time. So I never revisited. A lot of time, like, and I have a lot of traders whom I know, either members of my site or outside, whom I know are very good at options and all. The thing is that, like, what I do is working so well that if I have to make options work, I'll have to spend 3 4 months experimenting with it, and the opportunity cost of doing that is something which, at my stage in life, I just don't see it as this thing. But can it be done with options? There are traders on my site who do it with options, right? So yes, can it be traded differently than what I do? Yes, but I don't use daily charts. Like, I just use daily charts. I don't go on a lower time frame. Can you go on a lower time frame and slightly improve your entry or exit? Yes, but I just don't do that because it works for me currently. But yes, can you do options? Yes, possible.
Yes, and this is a style that really seems to depend on just compounding. You have position after
Hmm.
position after position.
Hmm.
As long as you can control the drawdowns, I mean, the accounts could just compound like crazy, especially over years or decades.
Hmm.
Hmm. Yeah. So if you want to manage, an account with 3 to 5 positions on average, maybe six, how would you do that with so many names, breaking out or gapping up? What's the best way to continuously rotate and I mean, we could speak in either large account or small account, but even, what's the best way to even grow a small account, or any suggestions for, traders under PTD who, swing trading could be very beneficial there. You hold
Hmm.
something and you could really
Hmm.
multiply your account and get into that,
Hmm.
25,000 plus.
I think fundamentally there are two ways to improve, grow small account or large account, right? One is you do a larger size per trade, right? The second is to do large number of trades, right? Means if you cannot do, and I don't think somebody who's a beginner should do a large size trade. I can do large size trade because I know what is my risk parameters and how much I am trading, and I know the capital which I'm trading. If I get wiped out, it's not going to be the end of my life, kind of a thing, right? But the easiest way for a small account to compound is to do lot many trades, right? Yeah. Means like, and this is where you have to find a methodology, or you have to find a setup which produces so many trades. And if you can do that, then you can compound much faster. And that's why, like, smaller accounts, they can do well. If they can't do day trading, they can do swing trading. Holding for 2 3 days is a very good thing. If you can get 5 6%, as long as your stop is not like 5 6%, and if your stop is 2.5 3%, and if you can get 6 7% on a trade, and you do it multiple times, it
So even
compounds,
though
right?
even though stocks can continue, it's best to kind of take the position off and continue rotating it and rotating it. Like,
Mm-hmm.
because
Mm-hmm.
for Chewy, for example, it makes a huge move,
Mm-hmm.
but at the end of the day, it took 6 days to do what it did today. But let's say you
Mm-hmm.
can make 20-25%.
Mm-hmm.
Now you take it off a few days ago. You have to be okay.
Mm-hmm.
Not looking at the long term, because
Mm-hmm.
you're continuously selling and moving into something else and rotating.
Mm-hmm.
So it's like 2-3 days around 10-20%, and you just keep on going and going.
Yeah, I think this is a fundamental debate in the trading community. There are people who believe that you should not spend your time hitting singles, and they're looking for these home runs only. They're looking for this uh, trend following kind of a method. They want to say, oh, you sold Chewy for 12% profit, and see, after that it went up 40%. Every
Hmm.
stock which I sell goes up. I don't feel any regret, because I know, as part of my strategy, consciously I'm trying to capture that fast part of the move, right? I'm not trying to capture the large. If I have to capture a larger move, then I'll base it based on fundamental reason, based on EP, based on some other methods which I have, like bucket 0, bucket 1, and bucket 2, which are stocks which I uh, scan based on fundamentals, right? But here, this strategy is designed to just hit these singles of 8 to 10%, right? Now,
Hmm.
that realization only somebody who's conscious about it has. A lot of traders new to the trading, they're constantly vacillating between doing this swing trading or doing trend following. And I don't blame them, because they don't have the experience and they don't have the understanding that most of the some of the best long term traders I know, and some of the best trend followers I know, their win rates are in 25 to 30% rate, right? And swing traders, I know a lot of them who have 60 70% win rates, because they're taking, see, when you decrease your holding period and when you decrease your expectancy about profit, your win rate improves, right?
Yep.
Because you're just, it's like a scalping on a 3 to 5 days time frame, essentially, is what you're doing, right? And basically, so that's the fundamental debate people have to resolve in their mind. I think, if you have to compound, look at, like, one of the Stockbee members who's like very active on Twitter, Monis, right? Monis is
Hmm.
one of the best traders I know, uh, who's like done phenomenally well. I seen, like, and what does he do? He's constantly putting money into trades, taking it out, putting money, taking it out, money. How many trades does he do, like, in a year?
Hmm.
Thousands, right? And that's why he compounds the way he compounds. So there are two ways you can, like, be so good that you can find a trade and hold it for its entire move, but be damn sure that what you are holding is going to be the one which is going to go up 80 or 100%, right? Or
Exactly.
else, if I have to eat a pizza, I can eat 100 slices of pizza, or I can eat the whole pie. It's same, right?
Yeah. The other day I was doing this math equation, and let's say you start with a $10,000 account and you take 5 positions. So you put 2,000 in 5 positions and you make 10% on that.
Mhm.
right? Even if you do 10% on one position, you make $200 that day.
Mhm.
20 days in a month, you could make 4,000, and
Mhm.
then now you have 14,000 for month two. And the same thing, five positions, you have
Mhm.
whatever it is, 2,400 in each. You make 10%, so it's 240, and for 20 days, and you just keep on doing that. It's just 10%, let's say, on 20% of your account. You just keep on doing that and keep on
Mhm.
doing that, and you hit those singles, and that's
Mhm.
that's I think what I realized is the best way to do that as well.
Mhm.
And that was obviously through your teachings and your singles.
Yeah. Yeah, means like people come to me all the time, like not members, non-members also, and they say, "Oh, how do I go to small account or big account?" I tell them hit singles.
Hmm.
Do they want to hear that?
No, it's
Yeah.
consistency and it's work.
It's work, right? And
They want to
they
make the
don't
big
want to
money
hear
right
that.
away, but
They want you to tell them, "Okay, look, and buy Tesla, it's going to go up 300%, right?" You tell them, "Okay, look, you need to do 300 trades to do 300%." Nobody is interested.
hmm it's a
Yes,
process that really
obviously
compounds and
traders
builds.
are interested, but then by that time they have thought through these things. A lot of trading success is about thinking through these some of these issues, right?
Hmm.
I consciously thought through these issues, and that is why I pay a lot of attention to hitting singles, right? Because I don't know when the next big trade is going to come, or whether it will come or not. Also, when is the next SMCR route or some trade is going to come? I don't know, but I know every day I can find three singles, five singles,
Yeah.
right? And
And you're limited to how many trades you could take. So if you're in
yeah.
five today and you want to hold it for a week, you're missing plenty of trades throughout the week.
Mhm.
MLGO and RGS were two examples. But if you're
Mhm.
sitting in Tesla, Chewy, and SMCI, you're gonna miss those other two. So the only
Yeah.
way to catch most of the trades, if you think about it, is to just keep on taking those singles and continuing on. Otherwise, you can't grow an account
Mhm.
that way.
Yeah, also see the classical. This debate has been around since like ages. Like uh, before the commissions in stock market came down, right? And people were trading commodities. When they were trading commodities, there were people who were trend followers, which is what that entire turtle traders and all were, and they like had 20% win rate, right? And then they had like these drawdowns which are 50%. That's why the swing traders who are like basically swing trading started in the commodities market, not in the stock market, right? Because the commissions were 150 $200 per side before around 1970s or 1980s, right? So the classical debate has always been ki look at the people who hit these singles or swing trade, the trend followers think that they are wasting their time, and the people who do trend following, the other people think you look and they're just holding on in the belief that they have so much dead time period when they're holding the stock which doesn't do anything,
Hmm.
right? As you know, most of the things which I think and most of the people know about EP, but the new thing which I have discovered in recent years, which is more EP 9 million, that's something which many people don't really know, or that is the thing which can really make you a lot of money, because it gives you a lot more opportunity universe. And within that, like you are a member, right? And you said or something, so you know some of the things which I've done, which is
Yeah,
like
yeah.
what I have discovered is that these stocks which have 9 million EPs, there are certain stocks for whatever reason the market just loves them, and they have repeatedly these 9 million EPs, and on those breakouts they tend to make 40-50% move. They are not like the normal momentum burst. When they move, even their 3 to 5 day moves are 50% plus. So I found a way to identify those stocks, and we call them sugar babies on the site. But these are stocks which have high number of 9 million EPs in a given period of time, either in 6 months or 1 year. And to give you an example, Mara is like, if you look at Mara swings, every time Mara swings, and Mara swings a lot in a year, just a normal swing in Mara is 30-40%, and many times 50-100%. Or CLSK, right? These are stocks for whatever reason, right? When they swing in 45-50% increment in just 3 to 5 days. Now knowing this gives you a lot of edge, because then I just monitor these 25-30 stocks which are this propensity when they move to move in 40-50% increment. So your momentum burst, you're just trading a momentum burst on them, or you're trying to anticipate a move on them, but Just a small move. CLSK, just like 4 or 5 days, a couple of days ago, I traded, and just like it makes 30-40 move in just like a ZP.
Excellent. So we're going to get up to the last section of the interview, and we're going to
Mm-hmm.
ask you some more casual questions. But
Mm-hmm.
before that, I'm going to draw the winner from last week in the contest is to leave a comment in the comment section, and anything that is interesting or a good takeaway, you can win a T-shirt. And so the winner from last week is Caveman787. Congrats, you've won a Trading Take shirt, and you can email webmaster@investorsunderground.com.
Mm-hmm.
Now, Pradeep, some of the questions that I want to ask you were related to, you've been in the market for decades now. Do you still enjoy trading? Do you still like learning the process? Is this what you're very passionate about and enjoy doing, or is this just work?
No, it's not work. It's passion. It's like, and I would not be trading because I made my money. I can like retire. I don't have to trade even single day, and I'll be very well off. Okay, or I'll not have some problems, right? I enjoy whatever I do. I develop new methods. I develop people. I develop traders. I work with traders all the time. Every day I work with traders, and it's the process which I enjoy. It's the joy which you get of discovering something new, discovering a new set of idea, developing a new set of idea, and making it work.
Yes, and then who have been some of your best students, or who have you really enjoyed watching flourish, who've learned from your style?
I think, and obviously, Krishnan Kulamagi is one of the most successful in terms of like before that, there was another person who made 100 million. He's not in the public domain, but he made 100 million trading. He took a 1 million account and drew it to 100 million doing that thing. Kelvin Wong was his name. But like there are a lot of other traders who are not on the public radar, like Monis, who he's not exactly trading my style, but he came into the site, learned a lot of things, and did Doji Star, who's in like so there are hundreds of traders like I've taught hundreds of traders, and the thing is that I don't insist that they should trade my style. So there are a lot of these kind of things. The other thing which I'm very proud of, which is uh, multiple times when traders had catastrophic losses, and when they contacted me, I help them to recover. Basically, there are a lot of traders who have had like multiple, like they have. So many of them are not even members of the site. We are not members, but when they had catastrophic losses and they were like really up shit creek, they contacted me, and I help them to recover their confidence and help them to recover from that kind of a situation by giving them a roadmap saying, "Okay, look, you need to hit singles, you need to have how you can potentially come out of these kind of things." So that's one thing, because successful traders can be successful for many reasons, but somebody who gets into catastrophic loss needs a lot of help basically.
Yeah, absolutely. And then the last question is, what is a great piece of advice that you've received?
Many years ago, many years ago, when I was not in trading, but I got one piece of advice, and which was to anything which you want to do, go deep. The real thing, if you want to make anything work, is don't look at 5 feet deep or 50 feet deep. Go 5 miles deep, go 50 miles, 500 miles deep. If you can go deep into any pattern, you can go deep into anything, you can make it work. So deep dive is something which I learned many years ago in my previous career, and that really made a difference to what I do, and that is the advice which I would give any trader.
That is a great piece of advice. So, Pradeep, thank you so much for joining us. And
No problem. Thank you.
how can people learn more about you, or how can they see what you're doing in your work?
I think they can go to my YouTube channel. They can go on Twitter. Like I do have a paid service also, but there is so much things in the free world which I have. Like, and I do the videos. I do. I have a free blog which I write occasionally, so they can go and find out on Twitter. I am active, fairly active nowadays.
Excellent. Thank you so much for your time, and thank you for your contributions to the trading community.
Thank you.
Thank you,
Thank you.
Pradeep.
It was pleasure talking to you. Thank you.
Thank you. Take care.
Thanks. Bye.
Thank you for tuning in to this latest episode of Trading Takes. Don't forget to hit the like and the subscribe button. And if you enjoyed this conversation, please check out some of others with some great traders. Thank you for watching.